In banking, there's been no shortage of news about banking over the last month, starting with Silicon Valley Bank, Credit Suisse, the earnings, including your earnings, which came out about the last quarter, was very strong. So now that we are where we are, looking back over it, what do we take away from it? Was this a banking crisis? Was it a mild disruption? Was it a tremor? What was it? What is going to linger from it?
Well, I think in the end of the day, a crisis is too strong a word, and words like that get used a lot. But at the end of the day, there was a fair amount of disruption for a few weeks there. Well, certain business models were sorted through, but on the other hand, you could see, and we could see, the stability in the other business models, which were the way banking is done, granular business and stuff. And so the good news is you're seeing the earnings by the broad industry come out this week. You're seeing things have sort of played out that way, which is very specific business models because of unique circumstances of the last 24 months or 36 months of massive amounts of cash put in the system, and then rates changing caught people, and those had to be sorted out. The good news is the basic industry has reported good earnings across the board. Deposits have come down, but that's intended by the Fed taking money out of the system. It's got to come out of somewhere. Banking system is what they want to do to, frankly, make credit tighter and help slow down the economy. So that's gone on. But you look at the capital liquidity and the earnings power of all these companies have been tremendous, and that's reassuring to people, and that's good news because in the end of the day, the banking system reflects the economy in America and economies around the world, and you hope it's in good shape, and it is. There's no question it's good shape.
How'd the regulators do? Were you talking to them through this period of time? And they stepped in, obviously, took in the deposit insurance. And do you think they should be making changes for the future to make sure we don't go through this again?
I think there'll be a time to look at the deposit insurance scheme in a rational way. It's never the time to look at any of this stuff the day after it happens because people have opinions of what happened. It never turns out to be as true as they thought. And even in the financial crisis, there are a lot of opinions about it started with Lehman. Well, that was the last part of it. It started in 2006 when what happened? Housing prices quit going up. And so, so it took a little more rational thought to think through all the different things that happened. So I think, the debate will be for transactional accounts, should there, during the financial crisis, 2008, 9, I think going on for three or 4 years, there was a guaranteed transaction accounts. So the individual smaller companies didn't have to be cash managers every day and figure out where the money was. And, that's a scheme you could do. There's sort of transactional money in the banking system, there's savings money in the banking system. And the savings money in the banking system is there to get rate and return. The transaction money is there to help the economy going. And the idea is you could ensure that more fully, and that's what they did in the financial crisis to stop people from figuring out. In the end of the day, a scheme like that would have changed the nature of what went on here because people were running around trying to figure out was there $250,000 in one in a small business or an entrepreneurial thing or a big company even. And so I think there'll be time to talk about that. We'll see it play out. It's worked pretty well. I mean, at the end of the day, the industry pays for the deposit premiums. We insure ourselves. The government is the go-between to make sure people believe it's there. And they get the money back from us. And so this, we just had our earnings, and we said our deposit insurance premiums before this went up $100 million per quarter from last year to this year. So I think we're $2 billion a year plus in it. So we insure it, and so this is nice because the banking industry pays for its own heirs, and then we have a high instinct to clean it up. And so I think playing with the thought process ought to be carefully dealt with, only because it's been in place since the 30s, and it's worked pretty well.
Your bank and some others stepped in with First Republic to help them out with some deposits, led reported by Jamie Dimon. Is that something we should expect in the future? I mean, is First Republic going to need more, or will other banks need more from the other banks?
I don't have any special insight about First Republic. Talk about why we did it as an industry. It was to stabilize one of our companies and provide liquidity, because it was a liquidity question. The assets were good. This is kind of the odd thing, because if you're around, if any of you are old enough to be around in the late 80s and 90s, that is when the banking crisis went on. People think the GFC, so-called, was a banking crisis. Actually, the issue was those companies weren't banks. So whether it was all the different companies you heard about that caused trouble, including, they weren't banks, and they were brought in the banking system, put an umbrella around them so they could fix them. In 08, in late 80s and early 90s, you had a highly inflationary, high interest rate environment of commercial real estate, and that was a banking crisis, and so that's different, and it happens at a slower pace, and so we were able to step in and help because that was an asset quality problem in the 80s and 90s. Commercial real estate, rolling real estate started in Texas, and oil and all this stuff. It just ran through all the regional economies. These companies had great asset quality. It's just they had a liquidity problem, and that's why we put the deposit in, and it worked.